Emails in there?
My emails?
Yeah, just to get into the Zoom.
Gabriel.
Don't mind, I can do this.
Sure.
Not good? Okay, I can redo it. I'll put it on a document.
Perfect. So while we get set up, I'll just introduce myself. Okay, great. So my name is Matt Littman. I'm a chartered accountant and I have my own practice called Mobile CPA. I'm really focused on working with real estate operators, so property managers, developers, larger scale landlords, and kind of everything in between. But we're not talking about mom and pop people that have one or two triplexes. We're talking about bigger. And I want to introduce my colleague and client and friend, Thomas Butera from Emerald Mountain Property Management. So Thomas is the
Just leave it.
okay. So Thomas is an established property manager, commercial, mainly commercial, actually no, commercial, residential, industrial property manager in the neighborhood. So he doesn't do,
Based in Vermont? Yeah. Vaughan. In Vaughan.
and he doesn't do leasing. So he's just a property management guy. That's the way we like to keep it. I do accounting. He does leasing. He does property management. You guys do leasing. So no conflicts, right?
Okay,
Um,
leasing and sales.
leasing and sales, right? Great. Okay. So I can control it from here. Okay.
It's pretty wicked. Yeah.
Lower?
Like well, the windows as people.
Well,
Yeah.
okay, so why I'm here today, right, is because we are linked accounting, as much as you guys may not like to hear about accounting. It is linked to your deals, right? So accounting can definitely be killing your deals, and we're here to fix that. We're here to fix the accounting for your clients so that it doesn't become a bottleneck. It speeds up the deal process and ends up with higher sales pricing and more commission in your client's pocket. So what we do at Mogul CPA is different than a traditional accounting firm because we focus on end-to-end accounting and taxes. So we could come in and replace the full accounting function that's normally handled internally by your client's internal accountants in their practice or in their business. We do bank reconciliation, rent rolls, GST, month-end closes, and we also handle the full corporate tax and personal tax aspects. So we work with a lot of family offices that have, they've been transferring the wealth for years. There's complicated trusts involved. We're very used to working with that, multiple corporations, and all the way through the personal tax filings as well. So yes, the accounting can kill your deals, and we're going to focus on three different. Thank you, Greg. Thank you, Gabriel. We're going to focus on three different things, but before we do that, just a little bit more about my practice. We're managing over $1 billion in real estate. So we're working with some major players here in Canada. We've grown the team to over 20 members right now, and we have over 50 five-star reviews on different platforms, Google, LinkedIn, and I think Facebook and some other ones too. And yeah, like I said, we only work with real estate clients. So now we'll get into a little bit more technical part, how bad financials can be killing your deals, right? So we're going to focus on two scenarios. One's leasing, and the second one will be more of a sale or purchaser context, right? So in leasing, net leases, when the recoverable expenses aren't clearly separated on your financial statements, it makes it very difficult to know what the end cost per square foot is actually going to be, right? So if you don't have your accounting together, you're walking into a negotiation and it becomes more of a clouded accounting conversation rather than an actual business conversation, because you don't even know what the actual cost per square foot is gonna be for your tenants, right? So you wanna have, I'm gonna show you exactly how you can identify that this is gonna be a problem in advance, so that you can take care of it before you actually get to the negotiation table. Next, we'll cover NOI. So you guys do quite a bit of purchase and sales here, and you know, NOI is a big driver for those sales conversations, but obviously it's not as simple as the seller presenting an NOI, putting a cap rate on it, and then closing the deal at that purchase price, right? The NOI is gonna get scrutinized, it's gonna be looked at on a line per line basis. The buyer and their due diligence team is gonna really question that, and if it's not, like, when you're selling a property, you guys know this better than I do, but when you're selling a property, you're selling the property, you're selling the NOI, but you're selling the story behind that NOI, right? So if the NOI doesn't line up with that story while you're presenting it to the market, and then you're trying to go back and make retroactive adjustments to the NOI, your deal's dead. Like, you're killing the deal with just that, right? So I'm gonna show you how an NOI statement is supposed to look like, so that you could identify these problems before you go to market with the property. And lastly, we'll cover rent rules, right? So also in a seller purchaser context, you're gonna be presenting these rent rules to your clients or to the potential purchaser, right? And the rent rules, they usually come from the property management software. So it's an extract from Yard, right? And it looks nice and clean, but it just because it's printed out from the property management software doesn't mean that it's actually legit, right? You want to be tying these rent rules back to the actual leases, and more importantly, back to the actual bank statements. So I'm going to give you a tip on how you could identify that there may be a problem with the rent rules when you get that first document from the client, and so that you could raise that and look like an expert, okay? Thank you. Okay, great. Okay, so let's cover the first topic. We're gonna look at the net leases, right? So as you guys know, in a net lease, the client isn't just paying the base rent. They're paying for the operating costs, so insurance, property taxes, property management fees, administrative fees, or whatever else is included in that lease. And that additional rent is gonna make up a significant number of what the total cost for the tenant is gonna be at the end of the day. So it's important to get this ironed out, right? You're gonna want to make sure that you have this together before you go and start promoting a property, because, well, the first question the tenant's gonna ask is, how much is it gonna cost them, right? So the problem comes from when all of the accounting is lumped into general accounts, right? You're gonna want to make sure that the accounting separates. You're gonna want to make sure that the accounting separates all of the recoverable and non-recoverable expenses very clearly. This way, when you go to market, you know exactly what the recoverable expenses are, so that you can provide your tenant or you can provide your potential tenants with a number that actually means something. Okay.
Recoverable expenses versus non-recoverable, that's like a routine rule, it's sort of generally accepted by the sort of tax laws.
No, actually, it's not. This is thank you, and obviously I encourage everybody to participate and ask as many questions as possible for context, but it's not. And a lot of general accountants, right, like the term accountant is a pretty loose term, and you know, general accounting coming in to manage your client's books doesn't mean that they're gonna actually, like, they may understand debits and credits, but it takes a specialist, somebody who actually understands the real estate business to present the financial information properly. So to meet actual accounting standards, you do not have to separate the recoverable from non-recoverable aspects. But you know, in order to present clear and accurate financials to your clients, it's a very important thing to consider.
And when you say recoverable, you mean the expense that you can pass on to the tenant in additional.
Correct, yes, exactly. And we'll take a look here. So just as a pro tip, if you're negotiating a deal, right? Here, let me just move to the next slide here. This is what you want to be going, if you're representing the the landlord, thank you, you're gonna want to have everything broken out really clearly like this. So the property tax, building insurance, common area maintenance, and property management fees all clearly stated as recoverable expenses, right? So this is gonna allow you as a representation of the landlord to go in and have a very clear and present a very clear outline of what it's gonna cost the tenant at the end of the day. If and you can see here that the recoverable expenses and the non-recoverable expenses are separated, right? In the case where you're representing a tenant, right? And you get a P&L that doesn't look like this, where the non-recoverable and recoverable expenses are lumped together. And there's a lot of ambiguity as to what is actually recoverable at the end of the day. Well, you guys know this better than I do. But when there's ambiguity, that leaves room for more negotiation, right? You could start poking holes and asking for rent reductions or other contingencies for the lease, right?
Typically, under the structural repairs, we would typically have structural repairs or replacements.
Right.
And then we get into amortization. So then,
Yeah.
a lot of prudent landlords are like, well, we're gonna charge you, but it's gonna be amortized or depreciated, right?
Yeah.
But anyway, and then my only other comment is the leasing conditions are probably too low.
Yeah, well, actually, that's important because the P&L should actually be based on the lease, right? Because every lease is different and there's different things that go into every lease and different costs that are recoverable and not recoverable and different property management fees and different thresholds between what's considered capital and what's not, and it could differ from one lease to the next. So you want to make sure that your accountant is reviewing the leases and making sure that the information that's coming out of the accounting software can accommodate those leases, accommodate the expenses that you're then going to rebuild to your tenants, right?
For sure. And there's there's lots of like tips and tricks, and there's the legal side to it too. Like we have landlord clients who who are very good at never replacing the parking lot, but just doing, the maximum amount you could do so that it could be charged back to the tenant, right? So you see all these lines on the cracks and the parking lot, they'll do small sections. It's never actually a replacement.
That's right.
So, there's lots of context, but.
Okay, so we'll move on to the next point of the three. And this one is the one where I've actually seen most value disappear like pretty instantaneously because NOI is so crucial when negotiating a sales or a purchase, right? For example, we had one client who was a property manager replace another property manager because the former property manager wasn't able to get their NOI lined up. So that former property manager had done a great job in releasing the property and increasing rents, but the NOI or the P&L didn't match that story, right? So they ended up replacing them with the property manager who's our client, who did line up the NOI and position that building for sale. So that's the dynamic, right? Your client is going to market with a number, their NOI number. They believe that number is true, but the buyer's team is going to scrutinize that number with every to the end, right? I'm sure you guys are familiar with dealing with the legal teams of the buyers, looking at the NOI's numbers, and the problem really that we could resolve is that the NOI should be correctly stated from the start. When you bring the property to market, it should line up, like I said, with the story. Because for the buyer is going to push for one-time costs that are sitting above the line and capital items that it should be below the line. And all of that should have already had the right amount of attention dedicated to it to get it all sorted so that the story lines up and the NOI is defensible in a negotiating context, right? So your client's NOI might be like $500,000, and we'll look at an example coming up, but the books only support like a $385,000 NOI. So that's only $120,000 difference in one net income to the next. But you guys we could both do math, right? So 120,000 divided by like a 5% cap rate, that's $2.5 million in valuation, right? So that's like a massive haircut off the sales price. And at 4 points, that's like 100K off the commission check as well, right? So this is what I'm talking about. So this is okay, this is in the context that you're selling a property, right? So in context that you're selling a property, you do not want it to look like it is on the left, where the redevelopment costs and the leasing costs are all buried into above the line, meaning above the net operating income red line, right? What you want is to have it clearly separated so that the redevelopment costs and the leasing costs are below the line, because the valuation is going to be based on the net operating income, the 500,000. Right, and there you see that spread that I was talking about. It's about 120,000 difference between the 509 and the 386, which is gonna, really impact your commissions significantly. So, you're gonna basically want to, in a negotiation for you guys, it depends if you're representing the buyer or the seller, obviously. So if you're representing the seller, you're going to want to make sure that the NOI is clean, right? So when you're first in those initial discussions about listing a property, ask your client for their net operating income statement. Ask them for the story of how that income is developed over the past 12 months. Make sure that story makes sense. Question it, because you know that the buyer is definitely going to be pushing back on it. So that you have a clean and defensible NOI that's substantiated when you go to market, right? On the other side, if you're representing the buyer, it's great. You prefer to have a P&L that looks like the red side, right? Because, well, you're basing that NOI off the lower numbers. So, it's the opposite, right? And if you're representing the buyer, you prefer that the seller's accounting is not great. Right?
Quick question, so outside of maybe month to month, year to year accounting services, do you help brokers and owners put together the sales package, like will you work with them on like a consulting basis?
Yes.
Cleaning up the P&L and the NOI, and on the inverse,
Yeah.
and when you're representing a buyer, would you help with such a service due diligence phase when they're reviewing the income statements of the seller?
We don't do financial due diligence, but we basically will, and I'll discuss about how we can plug in and help your clients in more detail after, but we're quite flexible with how we work with people. And one of the things that we like to do is we call a financial deep dive. We come into your client's business, we meet with them, we understand their pain points. We can meet with their professionals or their advisors as well. We get their point of view. And then based on that, we provide recommendations on how to fix and provide solutions to those issues. And it's up to the buyer, or it's up to the client to decide if they want to implement those solutions themselves with their own internal accounting team, or we could come in and help them too. Yeah.
You do this across Canada?
Across Canada, so we have got clients in all 10 provinces now. Yeah. Mainly in Quebec and Ontario. Ontario is our biggest market right now. Okay, moving on to the last point. Rent rules. Okay, so rent rules, right? You got a rent rule exported from your client's property management software, and think, okay, great, rents are $100,000 a month, right? But how valid is that rent rule? That's just an export from the property management software. You could bet that the buyer's due diligence team is not just going to take that at face value. They're going to dig into it, right? And rent rules is obviously a key driver for the NOI, right? So how can you guys look and analyze the rent to understand if it's actually reflective of what's actually happening inside the property, right? I'm going to give you a key thing that will make you look like an expert, and it's by looking at the balance sheet or the accounts receivable account, okay? Because if the accounting is being done properly and they're doing bank reconciliation, the revenue is not recognized based on the actual cash collected. It's recognized based on the cash that's billed, based on the rent that's billed, right? And if there's an outstanding amount inside the accounts receivable, it's a red flag. Well, there's normally an amount inside the accounts receivable, but if it's very large compared to the recurring rent that's inside the property, it's a red flag. So for example, if you're billing 100K per month in rent, but there's $300,000 in the accounts receivable that's still outstanding or collectible, well, there's something wrong, right? There's a red flag, and it's something that should trigger your mind to ask more questions. And you could ask for an accounts receivable aging report, which will show tenant by tenant who owes what for how long, like if it's over 90 days old. And that will give you a lot of context, and that you can bet is something that the due diligence team on the buyer side is going to be looking at. Okay. Then, okay, so we covered the more technical elements. Any questions so far? No, just keep rocking. Okay, so I'll tell you guys a little bit about how we covered the problem. So I'm going to tell you guys about how we could come in and resolve those problems for your clients, and why we're different than more traditional accounting firms, right? So like I mentioned before, we only do real estate. We only work with sophisticated operators, and we're not trying to do everything for everyone. Like that's all we work with, and we won't take on any of the clients that are outside of that scope. So we work focused on property management, accounting, rent rolls, CAMs, right? Common area maintenance expenses, recoveries, like I said, net operating income, and multi-entity tax compliance and structuring. Okay, so we built our systems specifically for this asset class, and thank you, Tom, for coming. We've helped Tom implement some of our solutions, and I think you could vouch for us. But we're able to basically identify problems really quickly when we come into a client's business, problems that the client may not even know exists, right? And then even more quickly provide solutions to those problems and fix the problems, right? And that's, we're very familiar with working with different property management systems. So Yardi, Buildium, Compass, like these are all very much inside of our realm of expertise, and we know how like even the non-accounting part, right? Like the maintenance request part and the ERP system part works pretty well for these softwares. Okay. So because we're specialized, it makes us faster at delivering. And also we're not traditional, we're different from traditional accounting firms because, like I said, we do end-to-end accounting and taxes. So we do everything from the bookkeeping all the way to financial statement preparation and tax return planning. So you're not bouncing between multiple different guys and emails going back and forth. We handle everything internally. So it reduces that amount, the friction there that exists for clients when they're trying to contact their accountants who are all being overwhelmed by their clients for the year-end process. It just happens seamlessly for them. Okay. So some of the clients that we work with, we're working with private equity firms, so more institutional based clients. We're currently working with a firm who I'll mention in a case study quickly after, called Lead, where they have massive guys, Henry Zavriev, out of Montreal. He's on fire, and just his accounting team is not able to keep up with the amount of volume of deals this guy's going through. So he asked us to come in and bring his accounting up to speed, fix up all of his year ends. So we ended up doing 75 plus entities, or with multiple properties in most of those entities, so that Deloitte could then come in and finish the audit, and we saved them a bunch of money on that. We also work with family offices.
Westcliff.
Was that
Westcliff?
Westwood?
Westcliff.
Westcliff?
Or no?
No,
In Montreal based.
no, I don't know. But yeah, family offices and property managers that Tom here, right? Okay. I just went through the Layad case study. Box Real Estate is another client of mine. PJ Group based in Montreal. They've got probably 800 units under management. They're actually more asset managers. They buy multifamily properties He's going to be in the newspaper probably soon. And get rid of them and bring in higher paying tenants. Um, so you know, with Fox Group, it was interesting because they actually had a part-time CPA with like 20 years of experience working for them before we joined. But the problem was that this guy was responsible for doing all of the heavy lifting in the accounting cycle, right? So responsible for doing bank reconciliations, financial statements, like just accounts payable, accounts receivable, everything. And he was just totally overwhelmed and not being able to do a good job. Because you know that's not what he's built for. That's not what he's good at, right? So what we came in and we basically assigned the right staff for every level of work. So the way that we work is that we work with a hybrid model that's part offshore and part onshore. So we have expert real estate accountants that are based offshore that are supervised by local Canadian CPAs. So most of the accounting work happens offshore, with the tax compliance work focused here in Canada. So with Fox Real Estate, we were able to bring in the right amount of junior accountants, offshore senior accountants, manager and controller accountants, all fractional, right? Like he didn't need a full-time controller. He needed somebody maybe 5 to 10 hours per week, but he needed multiple juniors and multiple seniors, right? So we were able to come in and replace his previous workflow with a very robust month-end close process so that he gets timely financials for all the properties across the full group every month, every time, and doesn't have to deal with CRA up his back, penalties and interest, delays in refinancing, and all of that stuff that accounting could get you, and the other stuff that I mentioned too. Okay, right. Okay, so this is going to address your last question, Greg. How do we usually work with our clients? So I think people may get scared about working with us because they think, oh, I'm gonna have to like get rid of my whole team and they're gonna have to replace us. Like that's not what I'm trying to do. I just want to. So basically, the way that we work with people is that we first set up a discovery call, or multiple discovery calls in most cases, where we actually come in and understand where things are breaking in the client's accounting process, and where there are opportunities and risks, right? So once we have a good understanding of that, we usually propose a financial deep dive. And in that financial deep dive, we'll actually study it. We'll go into all of the accounting systems, processes, emails, and review how that system is actually working so that we could propose a plan to fix everything. And that plan is actually delivered in a very nice, robust, easy to understand report to the client's desk. And the client can choose how he's going to if he wants to put those recommendations in place, if he wants to change them up, that's also something that happens. And also, who's going to carry out the work for those recommendations? Is it going to be his internal team? Is it going to be us? Or is it going to be a mix between us? So we're very flexible in how we work with our clients in this regard. Okay. Okay, we talked about so the reviews here, like I just wanted to highlight the reviews, like I'm not gonna read them, but what most of the clients say or mention is that we offer like a financial system, right? It's not just bookkeeping, it's not just corporate taxes that are involved all the time, but you know, we really come in with a financial system to support these more sophisticated real estate operators that need that accounting support. Okay, and I think we're closing with this one. So I think that there's a lot of similarities between my firm and the Behar Group. I think you guys are like a boutique service that really offers customized services to all the clients that you work with, and you also have there's a very good reputation for this group. So it's a pleasure to be here with you today. But I'd like to if you guys send us clients, you could rest assured that we will treat them like our reputation depends on it. Okay, so we will take very, very good care of them. I could assure you that. And we're also in the process of negotiating a referral agreement with Greg. It's gonna be a healthy, very healthy one. But I think we're just getting the dotting the i's and crossing the t's on that. Okay, that's all I got for you guys today, so thank you very much, and if you have.
Anyone have any questions at all? That was great. I mean, we talked about you coming in and we love when someone comes in and educates us and stuff.
Yeah,
We're all selling our services and we all want to be new people and we're happy to spread the word, but you know, you, I think, really added some insights that were helpful. Thank you for doing that.
thank you, thank
And
you,
I hope that you'll be able to circulate the decks and everyone has your contact information.
Absolutely.
Afterwards, I don't know if you
Yeah,
want to.
business cards.
Introduce Tom as well, and just put some context, because
Yeah.
some business development opportunity
Yeah.
there as well.
I'll leave my
It's nice that you brought a client and a friend.
Yeah.
Cause he's a client of yours.
That's right, and I don't get the chance to come out to Toronto maybe as often as I'd like, so you know, spending time. But Tom, like I said, Tom is the CEO of Englemount Real Estate Management Services. They have two offices, one based in Vaughan and one based in Mississauga, and they do third-party property management, only third-party property management, which is important when you're considering a property manager, and they don't do leasing. And they do a very, he has a strong background working at Colliers, at Avison Young and other major property management firms in the past. And he's out on his own and he's a great guy, so.
What asset classes have you?
Everything except the condo.
Except for what?
Condo, no condo.
So Tom and I discussed earlier and set things up, that, you know, hopefully, you know, we're gonna earn his confidence as well, because, you know, his clients, at the end of the day, if we do what's best for our clients, you know, then it's gonna look good. So if we're ever a fit as a broker or as an advisor, for your clients as part of that kind of a team, we're all on the road to.
Yeah,
So thanks for joining us. Is there anything you wanted to add about the company or what you're doing?
Myself?
Yeah.
Like Matt mentioned, I'm strictly a true third-party management company. That's where I started back in '99. I've worked with the owner managers, the pension funds, and saw all the red tape and heavy fat that they added to common area maintenance charges. So then when I decided to go on my own, I wanted to go back to traditional third-party management and work with the brokerage community and private landlords and build my team from there.
Fantastic.
Well, we're into every asset class, that is, including condos as well, but, we have a residential farm as well. So hopefully there's ways we can collaborate.
I'll add to Tom's thing because he deserves it, like we work with a lot of property managers and he's definitely one of the best, and you know, like I said, there's no conflicts of interest in the work that he does. He rotates his vendors, just these key things that you want to look for in a property manager that maybe a lot of landlords may not know about. He's doing his business. It's really nice.
Well, the only thing that would have made Robbie happier is if you brought like Arthur's bagel, so he doesn't have to line up in Sinclair.
They opened one, yeah, right?
Yeah, it's like
I went the other day.
did he line up? It was like crazy.
$22 for a bagel, black and cream.
You wait an hour to pay $22 for a bagel and black and cream.
Yeah.
It always comes back to food. Good segue to
Well,
lunch.
Montreal.
We're gonna, we have some pizza and falafel from Lee, and you know, it's our group's favorites. We're happy that you should join us.
Please indulge.
Yeah, thanks.
Everything's set up now,
Great.
and make yourselves comfortable, get to know everybody, and thanks for coming.
Thank you.
Great.
How are you, Abby?
Good,
Yeah, great. Feel good now.
Yeah.
A little nervous walking in, but.
No,
that's better
no,
now.
that's
Yeah,
good.
thank you.
It's like a human business, right? So the more you get to know people.
That's right, yeah.
You're gonna be on their radar.
That's right, yeah.
Yeah.
Oh, you'll.
Yes, yeah. That's the founder.
Yeah.
I'm not retired.
He's,
In fact, I'm 75, only work half the day.
Okay,
I'm 77.
okay, good for you.
I'm 77.
From 7 to 7, okay, I got it, yeah.
Thomas.
I've never done
I
this with you, but I do read it out a lot.
yeah, we're very
I
active.
do both.
We have offices across Canada. I do.
Ninety.
Yeah, but sure, keep it better than us, and we'll do the same.
Yeah.
Try to sell it.
I'll bring it.
And then if there's ever like sale or lease inside, or even just buy sell strategy, you know, when you're. We're happy to, we give lots of free advice, hoping to build relationships. Yeah.
It's like, it's gonna be over 58 years.
Really, wow.
The two people together, then that day. It's really awesome. Wow.
Good for you.
Square feet.
Very good at shooting.
So I work for him.
I got a card from you, do you have one? You know, every now and then, I get a client saying, hey, you don't need to talk.
Very good. You know,
My name's Michael.
No.
Nice to meet you. I know a couple of really bad, that's,
Yeah.
probably not.
Well, really, bad reputation.
No, I have a reputation.
He's a great guy.
I'm not good at
He
it.
recently did like a CJA, a big CJA event at the dealership.
Thank you.
The Ferrari dealership.
Yeah.
It's very nice.
Just have one client.
I do it. Like, at least here,
Yeah.
as a matter of fact, I just thinking about.
Yeah, I still get it.
Situation that,
I didn't know if that team knew.
it was in Florida.
Thank you very much.
Yes, nice to meet you.
Which I didn't realize you were based out of Montreal.
Yes.
Yeah.
Are you? Or?
No, I got a lot of buddies there.
Okay, cool. Cool.
I don't know, you know, just introduce yourself.
So. Okay, so wait now. Those two dealers, the other pictures, are sitting on then. 5 years, that they will build it. Because all the rest of this information.
Okay, yeah.
So hold on. What are you gonna do? Well, we're looking. This is out of sight, but you have to promise me. That you're only dealing with me because if not, I'm not dealing with you.
Yeah.
Yeah, we know your name, we know what you do. So sure enough. I signed him the deal with him.
Really?
$50 million for 2 dealerships.
Wow.
So,
Wow.
the one.
Legendary guy.
Yeah, for sure.
No, I did some residential too.
Yeah.
Are you from Toronto or you're from?
He's from Vaughan,
Vaughan?
Yeah.
born in Toronto.
Wait a minute.
My office is in Vaughan. Chris Lee.
He's in. You know, town, right? Same person. Okay, I'm a Jew up.
Oh, yeah?
Yeah.
Oh,
my great-grandfather.
Oh, really? Yeah. Jewish Italian.
Great grandmother.
Yeah, we got a good partnership going here.
Hell, yeah, we'll put him on,